So for the past 2 days, the stock market has been in a frenzy. If you guys haven't been following the stock market, there has been a handful of stocks that are seeing a ridiculous amount of traction, such as Gamestop, AMC, Nokia, BlackBerry, and Bed Bath & Beyond. What's up, winners? My name is Nam. If you're new here, welcome. Here we talk about things personal finance and credit, so you can start now by subscribing so you don't miss out on any future videos. So this type of video is a little bit different compared to what I usually make, so this topic is too hard not to talk about. So now let's go back to the topic at hand. This all happened when there was a subreddit that all banded together to push against the hedge funds on Wall Street. The catalyst for all this is when there are some companies that are not doing so well, such as GameStop, AMC, and all the other ones that I mentioned previously. And the pandemic just made it worse. People, they really weren't shopping all that often, and plus they weren't going to movie theaters, given the whole pandemic and all. So you have these big hedge fund managers, such as Marvin Capital, who are targeting these companies by shorting them. So whenever I am talking about a short, I'm talking about a short sell. This is when you borrow shares of a stock to sell them back later when the price dips, so that's how you would profit. So in a nutshell, this is what Melvin Capital and other hedge funds are doing since they are betting against companies will fail. So for companies such as GameStop and the other ones that I did mention, they are becoming something called a short squeeze. A short squeeze is some type of an event that can be compared to a snowball effect, but instead of rolling downhill, it rolls uphill. So typically when people buy stocks, you buy a stock, then you sell it later for a profit. But when you short a stock, this is when you borrow a stock at the current price, then as the stock begins to dip, this is when you sell it, and that difference will be your profit. So for people who short the stock, such as these hedge funds, if the opposite happens and the price rises, short sellers, they are forced to cover their positions by buying the stock at higher prices to minimize their losses. So as the price get higher and higher, this causes a lot more speculation. So when prices increase, people are like, oh crap, I gotta invest right now since this stock is currently pumping. So people just feed into the beast. When it comes to shorting stocks, this is nothing new. This has been around for quite some time, but the biggest problem that happened with GameStop and all of these other companies is that the majority of shares that are available are being shorted. Sometimes over 100% of the shares are being shorted. So when traders on Wall Street bets found this out, they even became more disgusted of how hedge funds are able to manipulate the market without repercussion. So they decided to start a revolution. This movement caused so many retail investors, probably mostly new, to buy and hold positions in stocks like GameStop, AMC, and Nokia. So as a result of this caused the price to dramatically increase, leaving short sellers, which in this case is hedge funds, to look to buy more shares. So as a result of this caused the price to dramatically increase, leaving short sellers, which in this case is hedge funds, to look to buy more shares to cover their positions, creating a squeeze, leaving them with millions of dollars in a stock that they would have to buy at a higher price to cover their losses. Actually, it has been reported by S3 Partners, a financial data company, said that on Wednesday, short sellers have lost around $23.6 billion on GameStop. That is an insane amount of money. So now you guys have a little bit of a backstory, but why does this all matter? The current situation right now is something like David versus Goliath, because most people that are retail investors like me and you, we feel like we're being taken advantage of from these hedge fund managers and these so-called institutional money. There has been many individuals in politics, celebrities, influencers that are talking about what's currently going on with the stock market, so there is definitely a movement that's going on right now. So at the making of this video, which is Thursday, Robinhood actually discontinued trading for people who wanted to get in these stocks that are experiencing a short squeeze. And on that same day, there's also a class action complaint against Robinhood. Well, let me correct what I'm saying here, because you were allowed to sell, but you weren't able to buy. So all you could really do is just see these charts is nothing but red. So it was like a massive sell-off because people were getting afraid. This caused so much commotion on the internet and so many people got pissed off. Surprisingly, a lot of politicians can agree with what's going on with Robinhood is not right. Who would have thought AOC, Ted Cruz, and Ben Shapiro can agree on something? So all of these people are saying that halting GameStop and all the other stocks on trading platforms such as Robinhood or any other brokerage should be investigated due to the fact that hedge funds, they can freely trade stock whenever they see fit. But when a group of investors on Wall Street bets, when they do it, it's market manipulation. When you really think about it, after market hours is really not typically accessible for most retail investors. So a lot of the action is actually happening behind the scenes. So now let's talk about whether or not you should join the fight. And the only way to join the fight is by buying and holding. I imagine that I'm probably older than some of these Robinhood investors. I think that they're more younger millennials or Gen Z. I'm 30 years old, so I'm a little bit older than the ones that often use Robinhood. The movement that's going on right now against Wall Street is definitely history in the making. We had never seen that many retail investors take it to the man. But since this is not financial advice, this is just for education and entertainment purposes only, I cannot recommend whether or not you should buy right now. Alright, so at the making of this video, let me tell you what the prices are as of Thursday. So at the close of the market, GameStop is currently at $193.60. For AMC, it's currently at $8.63. And for Nokia, it's currently at $4.69. The majority of the losses that happen to these stocks is roughly around 30 to 50%. So as you can see, the market for these type of stocks that are experiencing a short squeeze, they took a massive red day today. So from the lingo that's commonly used on Wall Street bets, which is diamond hands or rocket ship emojis, essentially they want you to hold down the fort and continue to buy and just not sell. So with that being said, all I can say is that I do support the movement of what's going on right now, and in the free market, regular people like you and me should have the ability to buy and sell whatever stock that you want. While the idea behind this is something I completely agree with, but for the majority of us out there who are investing with their own money, I do recommend just to be careful. I would not say this is investing due to the fact that there is no fundamental or technical analysis that's playing at hand, and it's just basically pure off emotion. Some people think that I'm way too pessimistic and say that I have paper hands or what you may call it, but I have had my fair share of getting wrecked in the stock market, so taking it to the man is all great and all, but you can lose money. So for me personally, I currently do have holdings in GameStop and AMC, and I will continue to hold unless the market shows me otherwise. So at this moment, the market has not dropped low enough for me to sell. I probably will continue to hold my shares as long as the market reopens tomorrow and people are allowed to trade. One thing that I have to share with you guys is that be careful of this mob or herd mentality. Whenever you read tweets, go on TikTok, or even on Reddit, you'll see a large influx of posts about holding the line, YOLO, you see these rocket ships and diamond hands, but just realize that whenever this will crash, and it will crash, the ones that are holding and buying the dips will get hurt the most. It is great to see others who made millions during this time frame, but eventually they will have to unload their shares to take the profit. And in the stock market, this is a zero-sum game. Somebody will make money and somebody will lose money. It just really depends on which side that you want to be on. So this is just my own personal thoughts on this. You gotta have your own risk tolerance and be comfortable with what you can lose. I'm not saying that this will not make you upset, but don't do anything that will leave you in a bad position where you cannot pay your bills or your rent. Many people out there think that when I'm saying something like this, or watch other individuals say this, is that I'm spreading fear in the market. But what I'm trying to share is the reality of what I've experienced in the past with day trading, investing in crypto, and pump and dumps. So this is nothing new to me. This kind of reminds me back in 2017, towards the end of the year. Bitcoin was getting pumped like crazy. If you were on Reddit at that time, everybody was saying that this is going to keep going up, it's going to go to the moon, and you hear other crypto managers saying that this is going to go to $100,000. But once the price started to drop from $20,000, people remained optimistic for a really long time. So for me just sharing this situation, I'm not even against cryptocurrencies. I do invest in Bitcoin, Ethereum, and other coins as well. So my question for you is, if you were to hold on to GameStop, AMC, or any of these other stocks out there, do you think you'll get your money back in the next couple of years? Is this something that you would feel comfortable knowing that you may never get your money back? I was actually on a live stream recently today from a YouTuber buddy of mine that goes by the name of Brian Jung. You should definitely check out his channel. He really does great stuff about credit, and he's really bullish about the movement. But I really don't think his audience like my perspective of what's going on. Even though I am a retail investor myself, and I do hold positions in the stocks right now, all for the movement, but when I mention risk tolerance and don't be afraid to take an L, people got all butthurt. I'm pretty sure that most of them have not experienced anything like this before in their lifetime, but when it does happen, it will change your perspective. Me personally, I'm more of a conservative investor. I do trade stocks, but not even on a daily time frame. I do it on a weekly time frame. So when new investors are entering into these stocks, they have this YOLO mentality, which I do not mind. When you are younger, you do have way more time to gain what you lost, but as you get older, you tend to be more conservative because the time in the game that you have is much less than who's going to be 10 years younger than you. So that's just my 2 cents on the situation of what's going on. I'm all for the movement and buying and holding when the water does get rough. But since the situation is very volatile, don't be afraid to take profits if you are up.